Imagine discovering that one company is among the largest shareholders in Apple, Microsoft, Amazon, Google, Meta, Tesla, Coca-Cola, Disney, and hundreds of the world's biggest companies. You'd probably ask, who owns this company? The answer is BlackRock. You've probably never bought one of its products. Yet it manages trillions of dollars for investors around the world, making it the largest asset manager on Earth. That has fueled one of the internet's biggest claims: BlackRock owns the world. Videos, posts, and conspiracy theories repeat it constantly. But almost none explain how BlackRock actually works, because the truth is less sensational and far more interesting. BlackRock doesn't own the world, but it has become one of the most influential companies in modern finance. And understanding why changes everything. Chapter 1. The company you never notice. BlackRock wasn't founded inside a Wall Street skyscraper by a centuries-old banking family. It began in 1988. Larry Fink had built a successful career trading mortgage-backed securities. Then one bad interest rate bet reportedly cost his employer around $100 million. For many people, that would have ended their career. Instead, it changed the way he thought about investing forever. Fink believed the financial industry had a problem. Everyone focused on making money. Very few focused on measuring risk. So he founded BlackRock around a simple idea. Before trying to predict returns, understand risk better than anyone else. That philosophy became the company's competitive advantage. While many investment firms chased bigger profits, BlackRock quietly built better systems. Over the following decades, it expanded into bonds, mutual funds, retirement investing, institutional asset management, and eventually technology. But one acquisition changed everything. In 2009, BlackRock acquired Barclays Global Investors. Along with it came something called iShares. Most people have never heard of iShares, yet millions own it without realizing. Because iShares is one of the world's largest providers of exchange-traded funds, better known as ETFs. That acquisition transformed BlackRock into the world's largest asset manager almost overnight. Today, the company manages trillions of dollars for pension funds, governments, insurance companies, universities, sovereign wealth funds, businesses, and everyday investors. Notice the wording: manages, not owns. That distinction is the foundation of this entire story. Chapter 2. The biggest misunderstanding. Here's where almost every viral video gets it wrong. When headlines say BlackRock manages trillions of dollars, people imagine a giant vault full of money. That's not what's happening. Imagine you hire someone to manage your retirement account. The money is still yours. They simply invest it according to your instructions. BlackRock operates on exactly the same principle. Its clients include pension funds, teachers, firefighters, governments, insurance companies, universities, businesses, and millions of ordinary investors saving for retirement. BlackRock invests their money. It earns management fees for doing so, but the underlying assets still belong to the clients. Think of BlackRock less like the owner of a hotel and more like the property manager. The buildings don't belong to the manager. They're owned by thousands of different investors. The manager simply operates them. That difference matters because it completely changes the story. When you hear that BlackRock owns 5% of Apple or 7% of Microsoft, it doesn't mean Larry Fink personally bought those shares. It means millions of investors collectively own them through funds managed by BlackRock. In other words, BlackRock is often the manager on paper. The beneficial owners are the people whose retirement savings, pensions, or investment accounts are invested in those funds. That's a much less sensational explanation, but it's also the correct one. So why does BlackRock appear everywhere? Why does it consistently rank among the largest shareholders in hundreds of the world's biggest companies? The answer lies in one financial invention that quietly transformed investing forever: the index fund. Chapter 3. The ETF Revolution. Before the 1990s, investing usually meant paying someone to try and beat the market. Fund managers researched companies, bought and sold stocks, and charged relatively high fees. The problem? Most professional investors failed to outperform the market consistently. So a different idea gained momentum. Instead of trying to beat the market, why not simply buy the market? That's exactly what an index fund does. If the S&P 500 contains 500 companies, the fund simply owns all 500. No guessing, no stock picking, no expensive trading, just following the index. BlackRock turned that simple idea into a global business through iShares. Today, when millions of people invest in retirement accounts each month, a large portion of that money automatically flows into index funds and ETFs managed by firms like BlackRock, Vanguard, and State Street. And that's why BlackRock appears everywhere, not because it's secretly buying companies for itself, but because millions of investors are buying the same diversified funds. Every paycheck invested, every retirement contribution, every pension allocation adds another small piece to a much larger system. Individually, those investments seem insignificant. Together, they've helped create one of the largest financial institutions in history. Chapter 4: The Machine Behind the Money. Managing trillions of dollars sounds almost impossible. How do you monitor millions of investments across thousands of funds in hundreds of countries every single day? The answer isn't hundreds of analysts staring at spreadsheets. It's a platform called Aladdin. Despite the name, Aladdin isn't artificial intelligence that buys and sells stocks on its own. It's a sophisticated risk management and portfolio operating system. Originally built for BlackRock's own investment teams after Larry Fink's early trading loss, the platform has evolved into one of the financial industry's most important pieces of software. Today, many banks, insurers, pension funds, and asset managers use Aladdin to monitor portfolio risk, analyze market scenarios, and manage investments. It has also become a significant business on its own, generating billions in annual revenue for BlackRock. Think of Aladdin like the operating system of a modern smartphone. It doesn't own your photos, it doesn't own your messages, but it helps organize almost everything you do. Aladdin plays a similar role for institutional investors. It measures risk, runs stress tests, monitors portfolios, models what might happen if interest rates rise, if oil prices crash, or if financial markets suddenly panic. Chapter 5: Power, Politics, and the Criticism. As BlackRock grew larger, so did the criticism. After the 2008 financial crisis, governments and central banks increasingly turned to firms with deep market expertise for advice on complex financial assets. BlackRock was among the companies chosen to assist with certain advisory assignments because of its experience managing large institutional portfolios. Critics argued this blurred the line between advising governments and participating in the same financial markets. Supporters argued that few organizations had comparable expertise. Then came another controversy: ESG, environmental, social, governance. Larry Fink's annual letters encouraged companies to think more about long-term sustainability and corporate governance. To supporters, that reflected responsible long-term investing. To critics, it looked like a financial company trying to influence corporate behavior. Political backlash intensified in the United States. Some states withdrew investment mandates. Others accused BlackRock of putting politics ahead of returns. At the same time, environmental groups argued the exact opposite. They claimed BlackRock wasn't doing enough to push companies toward climate action. So, does BlackRock quietly own the world? Not exactly. It doesn't own the trillions it manages. Those assets belong to millions of investors, from pension funds and governments to ordinary people saving for retirement. But that doesn't make BlackRock any less influential. It helped transform investing through ETFs, built technology that supports global finance, and became one of the most important institutions in modern markets. BlackRock didn't become powerful by secretly buying the world. It became powerful because the world trusted it to manage its money. And that's the real story. Sometimes the greatest power in finance isn't owning the assets, it's managing the system that moves them.